Most traders don't quit because they run out of money. They quit because they run out of emotional capital. If you are feeling empty right now, listen to this.
It's a graveyard out there.
Yeah.
I was looking at the data from Trade Society before we sat down, and
Yeah.
I mean, honestly, even after all these years in the game, the numbers still just make my stomach turn.
Yeah.
We're not talking about a few people washing out. We're talking about an exodus.
It's a mass extinction event, and we need to be really, really clear about what we're looking at here. This isn't just about P&L. It's not just red numbers on a screen.
Wow.
It's about broken spirits. It's about people who looked at the market, they saw a future for themselves, and then they had that future just violently ripped away.
Exactly. And let's just get into the cold, hard reality of it. The data says 80% of day traders quit within the first 2 years.
80%.
4 out of 5 people who open an account, fund it, go through all the trouble. Gone in 24 months. But here's the one that really scared me. The one that, it kept me up last night.
What's up?
Nearly 40% of day traders last only 1 month.
1 month. I mean, just think about that time frame. That's not a career.
No.
That's a vacation. It's a tryout. That is barely enough time to learn how the buttons on the platform even work.
You're still trying to figure out how to change the color of your candlesticks.
Right. And that tells me everything I need to know about why they're there in the first place.
It tells you they weren't prepared for the violence of it.
Yeah.
It's sheer shock. And, okay, let's say you managed to survive that initial slaughter. Let's say you're stubborn.
Mm-hmm.
If you stick it out for 5 years, only 7% remain. 7.
So when we talk about this, we are not talking about a hobby. We're not talking about a side hustle. This is a survival game.
It absolutely is. And the question we have to answer tonight is, why? Why is the attrition rate higher than almost any other profession on earth?
You don't see that anywhere else.
No. You don't see 40% of dentists quitting in the first month. You don't see electricians throwing down their tools after 4 weeks and saying, nope, I can't take this anymore.
It's the gap. It's the massive, gaping canyon between expectation and reality. People come into this game, and I use the word game because that's exactly how they treat it.
Yeah, that's the word for it.
Thinking it's a slot machine that pays out every Friday. They think it's a glitch in the Matrix where you just press a button and money comes out.
The casino mentality.
Precisely. We saw that stat, about the demographics of who's drawn to the high-risk stocks. The research shows that poor young men, particularly in urban areas, they often treat stocks exactly like lottery tickets.
They're not looking for a 10% annual return.
No. They're not looking to compound wealth over 20 years. They're looking for a way out. They're looking for a life-changing jackpot.
They want the Lambo, and they want it next Tuesday.
And honestly, who can blame them for wanting that? We live in a world that constantly flashes wealth in our faces, but that mindset, it just sets them up for the first phase of the psychological meat grinder.
The source material from Real Trading calls this unconscious incompetence.
Huh.
But I like to call it the fun phase.
Oh, the fun phase.
And we have to talk about this because everyone listening has been here.
It is so seductive. It's the honeymoon. You open a demo account, or maybe you toss a few $100 into a live account. You have zero fear because you have zero scars.
Right.
You buy something because a guy on Twitter with a cartoon avatar said to, or because the chart looked cool, or maybe just because the ticker symbol sounded aggressive. And this is the absolute worst thing that can happen to a beginner. You win.
The curse of the early win. It's so counterintuitive, but man, it is lethal.
Oh, it is.
You make money, and your brain, which is just, it's designed to find patterns even where none exist.
Yeah.
It instantly extrapolates that success out to infinity.
Yeah, you start doing the math on napkins.
You think, I made $500 today in 30 minutes. If I do this every day, that's $2,500 a week. That's 10 grand a month. I can quit my job in July.
You start looking at real estate listings. You start mentally spending money. You haven't even come close to earning yet. It's intoxicating.
Right. You don't realize you just got lucky. You don't realize you walked blindfolded into a minefield and just happened not to step on a mine.
You think you're a genius.
You think you're a genius, but you're just a tourist in a war zone who hasn't heard a gunshot yet.
And that's where the trap snaps shut. Because eventually, the luck runs out. It always, always does. The market shifts, the volatility dries up, or it spikes.
The strategy, if you can even call it that, it just stops working.
Yeah. That buy the dip thing that worked for 6 months suddenly gets you killed because we entered a bear market.
Yeah,
and all of a sudden, you're not winning, you're bleeding.
And this is where we transition from the fun phase into what the folks over at the Trader's Mind call the painful phase.
This is where we need to park the bus for a while.
This is it. This is where the quitting happens. This is where that 40% washes out in month one. Because it's not just about losing the money.
No. If it was just about money, people might stick around longer.
It's about the emotional hell that just opens up right underneath you. It's the realization that you have absolutely no idea what is going on.
That YouTube source, it hit the nail on the head. It defined the painful phase as the bridge. It's the desert you have to cross to get from the fun phase to the profitable phase.
And the problem is nobody packs enough water. Nobody tells you how hot it gets out there.
Everybody shows you the oasis on Instagram, but nobody shows you the miles of scorching sand you have to walk across to get there.
It's where your confidence gets taken out back and shot. You're losing money, sure. But more importantly, you are questioning your very identity.
Yeah, that's the core of it.
You thought you were smart. You thought you were disciplined. You thought you were special. And the market is showing you tick by tick, red candle by red candle, that you are none of those things.
Let's dig into the case studies, because I think everyone listening is going to see themselves in one of these guys. These aren't just abstract concepts. These are real patterns of behavior that destroy accounts. Let's talk about Jordan.
Oh, Jordan. This story, it breaks my heart because it's so classic.
It really is.
Jordan wasn't a gambler. Not really. He wasn't the lottery ticket guy we talked about. He was smart. He was disciplined in his real life. He had a good job as a project manager.
He came in with all the right attributes.
All of them. He thought he would succeed quickly because he succeeded at everything else he ever tried. He was the guy who got straight A's, the guy who got the promotion.
That's the IQ trap, which we'll get to later. But what specifically happened to him? What was the catalyst?
The spiral. He was about 6 months in. He'd make a little progress, then give it all back. 1 step forward, 2 steps back. He was just treading water. But the breaking point was one specific day. He took a trade. It hit his stop loss. Fine. Took another one. Stopped out. He lost 4 trades in a row.
Which mathematically is going to happen.
It's totally normal. It happens to the best systems in the world. If you have a 50% win rate, a 4-loss streak is a statistical inevitability. It's like flipping a coin and getting tails 4 times. It happens.
But Jordan didn't see it as a probability. He saw it as an insult.
He took it personally.
Yeah.
He felt like the market was specifically targeting him. Like the market maker knew exactly where his stop loss was and just went down there to tag him out before ripping back up.
We've all had that feeling.
Oh, yeah. He broke down after that first loss. He got angry. His face got hot. You know that feeling, right? When your ears start burning. And here comes the term. Every single trader knows way too well. Revenge trading.
He didn't walk away. He didn't close the laptop.
No. He increased his lot size. He doubled down. He wasn't looking for a setup anymore. He was looking to get his money back.
He was trying to strong-arm the market.
Trying to demand a refund from a machine that doesn't care if he lives or dies.
And we all know how that story ends. The market smells desperation. When you trade with that kind of anger, you're not seeing the chart anymore. You're just seeing red. You're blind.
He blew half his account. In a single afternoon. Half. 6 months of savings gone in 4 hours. And he called his mentor, just totally broken, asking, I'm doing everything right. Why is this happening to me?
And the mentor gave him that hard truth. You're not doing everything right yet. You're doing everything you think is right.
That distinction. That is everything. Jordan thought doing it right meant memorizing a chart pattern. He thought it meant knowing what a bull flag looks like.
Right.
He didn't realize doing it right meant taking a loss without losing your mind.
Yeah.
The market hadn't humbled him yet.
That's the real purpose of the painful phase. It forces you to confront the parts of your personality that you try to hide from everyone, even yourself. Jordan had to confront his ego.
Yeah.
He had to confront the fact that he was not in control. In his day job, if he worked harder, he got better results. Simple. In trading, sometimes you work your butt off and you still lose money. He could not process that disconnect.
He couldn't handle the lack of correlation between effort and reward, at least in the short term.
Exactly.
Then you have a guy like Malik. This one really resonates with me because I see it in so many hardworking people. Malik wasn't trying to buy a Lambo. He just wanted to provide for his family. He was a grinder.
But he fell into the cycle of the curse.
The I'm cursed syndrome. I hear this all the time.
Yeah.
Hey, every time I buy, it drops. Every time I sell, it rallies. Somebody is watching my account.
The market makers have a camera in my living room.
It sounds like paranoia, but man, it feels real when you're in it. Malik had a great week, A disciplined week, made $600. He felt like he'd finally cracked the code.
On top of the world.
Absolutely. The next week, he did the same things, but the market conditions changed just a little bit. He lost $1,200.
Oof.
And he told his mentor, I think I'm cursed. I think this just isn't for me. Maybe I'm just unlucky.
And what did the mentor say? You're not cursed. You're just early.
Exactly. It's the concept of tuition fees. This is a business. Think about it. If you wanted to be a doctor, you'd pay hundreds of thousands in tuition and give up 8 years of your life before you made a single dime.
You wouldn't drop out of med school after the first semester because you had to pay for a textbook.
But in trading, the losses are the tuition. You pay the market to teach you.
But people just don't see it that way. When they lose $1,200, they see it as a fine. They feel like they did something wrong and they got punished for it.
So you have to flip that mental switch.
You have to. That money wasn't lost. It was invested in your education. The problem is Malik didn't know what lesson he was buying with that money yet.
He was buying humility. He was buying data on what doesn't work. Every loss is a lesson, but only if you stick around long enough to actually read the textbook.
And then there's Raymond. Now, this is the one that catches the guys who actually have a little bit of talent. Raymond would have a great week. He'd be up $2,000. He'd feel unstoppable, like he was reading the tape perfectly. And then the very next week, he'd blow it all and then some.
The overconfidence trap, the hot hand fallacy.
It's the most dangerous state to be in as a trader. When you feel good, you feel invincible.
And when you feel invincible, you stop checking your risk. You stop placing stops. You start thinking you are the market.
You start sizing up because you can't miss. You think you have the Midas touch.
There's a stat from Trade Society that backs this up perfectly. They found that traders with a strong past performance go on to earn strong returns, but only 1% are predictably profitable.
Right. So you can have a hot streak. You can double your account in a month, but that does not make you a trader.
No, that makes you a guy on a heater. It makes you a gambler on a lucky run.
And the market punishes you for feeling good. As soon as Raymond let his guard down, bam, caught in the chop. A sudden news event spikes the price against him, and because he was too arrogant to use a stop loss, he's wiped out.
It's that dopamine hit. We're wired to seek pleasure and avoid pain. Winning feels amazing, so we want to do it more and we want to do it bigger. We chase that high.
And the market is the ultimate dealer. It gives you the first hit for free, gets you hooked, and then it destroys you.
It waits until you're fully leveraged, fully confident, and fully exposed before it just pulls the rug right out from under you.
Let's pivot a bit to the science of why this all happens, because I don't want people listening to think, oh, these guys were just emotional wrecks. There's a structural psychological breakdown happening here. We have to talk about conscious incompetence.
This comes from the Real Trading Source, and it's the second stage of their psychology model. We talked about unconscious incompetence. That's the oblivious fun phase where you don't know that you don't know.
Conscious incompetence is when you wake up.
And it is the most painful mental state to be in. It's the realization of, I know exactly what I'm supposed to do, but I literally cannot get myself to do it.
It's like sleep paralysis. You see the truck coming, you know you should move, but your legs just won't work.
You know you should cut the loss. You can see the price dropping below your support level. Your brain is screaming, sell, but your hand will not click the mouse.
You're frozen in the headlights.
We have a case study for this too. Ethan. Now, Ethan was a math genius. Super high IQ. He could look at a chart and spot the pattern instantly. Logic was his superpower. He understood probabilities better than anyone.
And in trading, he was a disaster.
A total disaster.
Because trading is not an IQ test. It's an EQ test. It's an emotional intelligence test.
Yeah, and Ethan had zero emotional control. He would be in a winning trade, see a tiny little pullback, just a normal market breath, and he'd panic close the position for a tiny profit. Then he'd watch it run another 100 points without him.
Or the flip side.
Or he'd miss a move, get hit with that FOMO, the fear of missing out, and chase the price as it's spiking up, buying the exact top.
His brain knew the math. His brain knew the probability. But his amygdala, the fear center of the brain, it hijacked the steering wheel.
He was fighting his own biology. The amygdala sees a loss of money the same way it sees a saber-toothed tiger. It triggers a fight-or-flight response.
And logic just goes out the window. When the blood leaves your prefrontal cortex and goes to your muscles so you can run away from a predator, you literally become stupider. You cannot think logically when you are in a state of panic.
And that's why really smart people often make the worst traders.
Yeah.
They're so used to being able to think their way out of problems.
Right. They think if they just analyze harder, if they just add one more indicator, if they just tweak the settings on the algorithm, they can solve the market.
But you can't solve chaos. You can only manage yourself within it.
Which brings us to Sophia.
Yeah.
This one, man, this one hits close to home for me. Sophia was the freezer.
Sophia was so organized. She treated trading like a job. She took notes, had spreadsheets, but she had this deep-seated need to be right. She entered a trade that was supposed to be a scalp. A quick in and out, maybe 5 minutes max. The trade went against her.
And instead of cutting it for a small, manageable loss,
She froze. She held that trade for 3 hours. She just sat there staring at the screen, bargaining with it. Just come back to break even, and I promise I'll get out.
we've all made that deal.
Just go up a little bit. She watched it bleed 8% of her account because she simply could not face the reality that she was wrong.
There is a brutal stat from Trade Society on this exact thing. Investors tend to sell winning investments while holding on to their losing investments.
It's called the disposition effect. We sell our winners early because we're terrified the profit will disappear. We want to lock in that good feeling. But we hold losers forever because as long as the trade is open, we haven't officially lost.
We can still hope.
And hope is a dirty, dirty word in trading. Hope blows up accounts.
Sophia lost 8% not because the market crashed, but because she couldn't accept a small sting. She turned a paper cut into an amputation. She let a manageable problem become a catastrophic one because her ego would not let her say the words, "I was wrong."
It goes so deep, trading just. It exposes your character flaws. If you're stubborn in real life, you'll be stubborn with a losing trade. If you're insecure, you'll hesitate on your entries. If you're arrogant, you will oversize your position.
It all shows up on the chart. You can't hide. The chart is a mirror of your soul.
And that brings us to the valley, the Dunning-Kruger effect. We all know that chart. You start with super high confidence and low competence. That's the fun phase.
Sounds stupid.
Right. Then as you learn more, your confidence just crashes. You plunge into the valley of despair.
The source material had a really raw moment about this. The narrator, he talks about crying in the bathroom.
Yeah. He talks about day 42, crying after a loss, day 67, blowing a third account, day 129, just realizing he has absolutely no idea what he's doing.
We need to normalize this.
We really, really do. Every profitable trader I know, and I mean every single one, has a story about a moment where they were on the floor, literally or metaphorically, just sobbing.
It's not just about the money lost. It's the feeling of being broken. You put in the work, you study the books, you watch the videos, and you still fail. It makes you feel stupid.
It makes you feel defective.
You look at the screen and you feel like the market hates you personally. You feel like a failure, not just as a trader, but as a person.
And that's the Dunning-Kruger crash. You realize how vast the mountain is, and you feel so small. But here's the thing about that pain. That crying in the bathroom phase, that is the filter. That is the great filter. That is where the 80% quit. They hit that pain and they say, this isn't worth it, and they walk away.
And if you're in that bathroom right now, if you're staring at a blown account and wondering if you're just not cut out for this, you need to understand that you are exactly where you are supposed to be.
You're not failing. You are paying your dues. You are at the gate.
But how do we get out? I mean, how do we climb out of the valley of despair? Because we can't just wallow in the pain forever. We have to move toward a solution.
The solution starts with accepting boredom. We talked about the fun phase, then the painful phase. The bridge to the profitable phase isn't a rocket ship. It's a long, flat, boring road.
The narrator's mentor said something that was so profound. Only real traders improve when nothing is happening.
That's deep. Think about it. When you're winning big, you aren't learning. You're celebrating. You're high on dopamine.
And when you're losing big, you're not learning, you're panicking, you're in survival mode.
The real learning happens in the middle. The plateau is where you stop losing big, but you aren't really winning yet either. You're just spinning your wheels, breaking even.
And most people quit here too because it feels like stagnation. They want the action. They want the rush.
But this is where the wiring changes. This is where Brianna's story comes in.
Brianna was the hard worker stuck in that make money, lose money cycle, the hamster wheel. She was chasing the feeling of being a trader. She wanted the excitement.
And her breakthrough.
Yeah.
It wasn't a new indicator. It wasn't some signal service. It happened when she stopped chasing the dopamine. One day, she didn't overtrade. She didn't panic. She just executed. She saw the setup. She took the trade. She managed the risk. and she closed it. And she felt nothing. She felt calm.
That calm is the signal. When trading stops being exciting and starts being boring, that's when you've turned the corner.
That's the unconscious confidence stage real trading talks about.
Right.
It's like brushing your teeth. You don't get excited about brushing your teeth. You don't post on Instagram about it, but you do it correctly every single time without thinking.
Brianna became a trader the day she stopped needing trading to make her feel something. She started treating it like data entry.
Like a factory job. Punch in, pull the lever, punch out.
And then there's Sergio. This metaphor, it just blew my mind. Sergio felt like he was climbing a mountain that never, ever ended. He was exhausted. He was fighting every single day.
And his mentor told him, "You're not climbing the mountain. You are the mountain."
You aren't battling the market. You're battling yourself.
That is the entire ball game right there. The chart is just a mirror. The candles are just reflecting your own greed and fear right back at you.
Once Sergio realized that, he stopped fighting the price action. He realized the market is just a river. You can't fight the river. You can only learn to swim.
He started working on his own discipline. He started meditating. He started focusing on his reaction to the market rather than the market itself.
So let's get tactical. We've talked about the feelings, the stories, but if I'm listening to this and I'm bleeding out, what do I actually do? What's the tourniquet?
Okay, first step, journaling. And I don't mean just writing down bought Apple at 150. That is useless. I mean an emotional journal. The Try to Society article mentioned tools like Edgewonk, but a notebook works just fine too. You need to track your headspace.
You have to write down, why did I take this trade? Was I bored? Was I angry about the last loss? Did I just want to feel some action? You have to catch your triggers before they pull the trigger for you.
You have to become the observer of your own mind. You need to know that at 11 a.m. on a Tuesday, you tend to get bored and take stupid trades. Once you know that, you can walk away from the desk at 10:59.
Second, risk management. This is from the Real Trading Source, and it is absolutely non-negotiable. Never, ever, ever trade without a stop loss.
It sounds so basic, but people don't do it. They think they can use a mental stop.
They can't. A stop loss is your seatbelt. You might be the best driver in the world, but if someone T-bones you, or if the Fed announces a surprise rate hike and the market crashes 300 points in a second, you need that belt to survive.
If you don't use a hard stop, you're just waiting for the day you die. It's not an if, it is a when.
Protect the downside. The upside will take care of itself. If you can just survive the learning curve, if you can just keep your chips at the table, you will eventually learn. But if you blow up, it's game over.
You're out of the casino. You have to go back to your day job and save up for another year just to get back in.
And the third piece of advice, simplify.
The aha moment.
Real Trading describes this moment so beautifully. It's the moment you realize you don't need 12 monitors and a holographic AI algorithm. You realize that a simple moving average is enough if you are disciplined.
The strategy is 10%. The execution is 90%. You can give a losing trader the best system in the world, and they will lose money because they won't follow the rules.
They'll second guess it. They'll override it.
You can give a winning trader a coin flip, literally heads or tails, and they might break even or even make a little money because they manage their risk perfectly.
It's about stripping away the noise. Stop looking for the Holy Grail. The Holy Grail is looking back at you in the mirror. It's your own self-control.
So we've covered the horror stats. We've covered the heartbreaking stories of Jordan, Malik, and Sophia. We've covered the science of why our own brains betray us. And we've talked about the path out, the boring, disciplined path of the plateau.
But I want to bring this down for a second. I want to talk directly to the person listening to this who is in pain right now. Maybe you lost big today. Maybe you're hiding your losses from your spouse. Maybe you feel that heavy rock in your gut that just will not go away.
Listen to us. If you are in pain, if you are discouraged, if you feel like quitting, congratulations.
Seriously, congratulations, because you have reached the barrier to entry, this pain. It's the gatekeeper. It keeps the tourists out. It keeps the gamblers out.
The painful phase exists for a reason. It's not there to punish you. It is there to burn off the parts of you that cannot handle wealth.
That's it right there. You cannot handle big money if you're impulsive. You cannot handle success if you are arrogant. The market has to crush that arrogance out of you before it can trust you with its liquidity.
If you got rich while you were still impulsive, you'd just lose it all anyway and probably destroy your life in the process.
You are in the cocoon. And the cocoon is a violent, messy place. It's where the caterpillar literally dissolves into goo before it becomes a butterfly. It hurts to dissolve. It hurts to lose your identity. But it is the only way to fly.
Remember that quote we love. Trading is 10% strategy and 90% who you become.
You're building a new person, a disciplined, patient, emotionally resilient person. And that person will be better at trading, yes, but they will also be better at life, better at relationships, better at handling any adversity. The market is the greatest self-improvement course in the world, but the tuition is expensive.
So if you are in the darkness right now, do not quit. You are closer than you think. The fact that it hurts this much means you care. The fact that you're still here listening to a deep dive about trading psychology means you are fighting.
Keep showing up, keep journaling, keep placing your stops, survive the day, then survive the next day.
You are not climbing the mountain. You are the mountain. Master yourself, and the market will follow.
We'll see you in the markets.
Stay disciplined.